Hello, I'm Yutaka Watanabe, a tax accountant. Welcome to the channel. Tax Accountant Nabe solves your money problems. Today, I'd like to talk about what is international taxation. International taxation plays an incredibly important role behind the scene of the global economy. Today, I'd like to dive into what it really is. What kind of tax drama unfolds behind business that cross national borders? Let's take a look together. This topic may sound complex, so let's begin with a very simple example. In reality, anyone doing business across borders encounters this issue. It's almost like a tax puzzle that requires some careful thinking, and it all starts with one simple question. Suppose a Japanese company creates a huge hit product that sells exemplary well in the United States and earns substantial profits. Who has the right to tax those profits? Japan, where the company is based, or the United States, where the sale occurred? Or could both countries tax the same income? This seemingly simple question is actually the gateway into the deep world of international taxation. And this question creates two major traps, like two sides of coin. What are they? The first is double taxation. Using our example, both Japan and the United States may claim the right to tax same profit, resulting in tax being imposed twice on the same income. For companies, that can be devastating. It can eliminate much of the benefit of doing business internationally. The second is opposite problem, tax avoidance. This occurs when companies intentionally shift profit to low tax countries or regions to minimize the tax they should pay. For governments, that means losing vital tax revenue that supports public service, such as education and social security. Both are serious problems. That is why international taxation exists, to create a common framework so global business can operate smoothly and fairly. In a sense, it serves as traffic control for the global economy. But what is the ultimate goal of these global tax rules? It is not simple. Collect tax properly. It is about balancing two important objectives. First, governments want companies to pay appropriate taxes, but if taxes become too burdensome and weaken a company's ability to compete globally, that creates another problem. So, international taxation seeks to balance proper tax compliance and corporate competitiveness. That is its ultimate goal. Achieving this balance is not easy. Each country has different tax laws. On top of that, there are tax treaties, special rule books between countries that must be interpreted carefully. Professionals in international taxation must navigate all of this while maintaining fairness and competitiveness. That is why advanced expertise is required. Experts around the world work every day on these challenges. Today, we looked at the basics of international taxation, but let me leave you with a larger question. In a digital world where business and money can cross borders instantly, what kind of rules are truly fair? Fair for companies, fair for governments, and fair for all of us who live in society? The answer may not be simple, but that is exactly why it is worth continuing to think about. How should we design global tax rules for the future? How should those rules evolve with the times? That may be one of the biggest and most important challenges we all face in a globalized world. Today, I spoke on the topic, what is international taxation? Please also visit the website of Yutaka Watanabe, Tax Accountant Office. I will continue sharing content on the theme of money, so please subscribe to Tax Accountant Nabe solves your money problems.